federal government has prioritized spending on defense and security, infrastructure and education, with the sectors getting a combined 5.15 trillion allocation in the 16.39 trillion 2022 budget proposal. The Minister of Finance, Budget and National Planning disclosed this at the public presentation and breakdown of the highlights of the 2022 appropriation bill on Friday. Joining us now for a further discussion on the budget is an economist and the Managing Director of COWRY Asset Management, Johnson CHUKWU. You're welcome to the program, Johnson. Good morning.
Good morning.
Good morning, and thank you for having me. Good morning.
You're welcome. You're welcome. Well, you've looked at, you've seen what the budget looks like, and just yesterday we've had an opportunity to see a bit of the breakdown of the budget of development and sustainability. The president says, how much of faith do you have in this budget, and which key areas do you think will interest Nigerians?
Okay, the issue of faith on the budget is actually different thing entirely. At the realm of religion. Okay, the basic challenge we have with the budget is that for the government to be projecting an expenditure of 16.39 trillion naira at this period in time, given the history of performance of the revenue projections of the budget government, is actually a challenge, and that's the greatest challenge we have in the budget. Because we have to recognize the fact that if you do not achieve your revenue projections, the only option you have is to borrow. And we all of us are in unison when it comes to the issue of the level of debt we've accumulated as a country. And virtually everybody is saying, look, we're getting to a point where the debt is no longer sustainable. So if you do not build on the revenue, it's not enough that you balloon your expenditure based on faith or hope. That they say hope is not the strategy. And I think when you talk of faith, it's at the realm of religion. It's about the power of the Almighty. So, but when you talk of managing the economy is not a chance event. It has to be a diligent, well thought out, well planned, diligently executed effort that will achieve the result you have set out to achieve. The intention of the budget looks good or looks exciting, but whether the budget is achievable is a different thing. And if you look at the history of the past 5 years, we've not gone anywhere to achieving the core of the budget, which is the capital expenditure component. We've always met the the expenditure budget, particularly with the overhead. And what we have done is that because we are not achieving the revenue budget, we keep borrowing to meet what you call those expenditures that you can't avoid: debt service, the overhead of the government, paying salaries and wages. And the core of development is left undone.
Understood. Well, thank you for joining us, Mr. CHUKWU. It's good to see you again, albeit via virtual means. But, as you said, yesterday, COWRY, he did acknowledge the fact that much of the petroleum subsidy had eroded revenues, making it virtually impossible for Nigeria to adequately fund its own annual budget, despite oil prices going up recently. I mean, I can't imagine that being a surprise to anyone. So when we know what we know about our dependence on oil and how that's affected our economic standing, what can we expect from this budget? How can we expect this budget, rather, to be any different?
What we should expect from the budget is that those expenditures that are not available, the government will keep them, we meet them. If we have to borrow, we borrow to meet them. The government has been projected to borrow a deficit of about 6 trillion naira, but I think the budget deficit will be far above the 6 trillion naira. There are some provisions that, for me, are fundamental to the social development of the country. There's a provision for a census in 2022 that is critical for us, so that we have a population and we know our population, the demography of the country, and then use it to plan for the future development of the country. That, for me, is very important. The expenditure for security or defense is also important, because we are gradually degenerating into a governable state. And if you do not address the insecurity, you're not going to address the flow of capital into the country. You're not going to address even productivity in the country, because we are seeing a lot of displacement of farmers in the several family bases of the country. We are seeing displacement cutting across the country, aspects of all the sectors of the country or sections of the country. So voting, having defense, giving them the lion's share is also important to me. The next thing when it comes to budget allocation is getting value for money. Which is really getting value for the money we are spending. That's one area the government has to work on, because if you spend and you do not spend in the most efficient manner, you may vote so much amount to a particular sector or segment, and then you don't achieve result from that. We need to look at value for money when it comes to the money we are voting for defense. I don't think we've achieved so much traction with the amount we voted for that. So for me, those are the key areas. The concern areas are, I think the provision for debt service is understated, given where we are, how much we have spent on debt service. So we need to look at that again, because debt service is one expenditure that you must meet if we have to maintain a financial integrity, the integrity of the country. It's not a discretionary, it's what they call non-discretionary expenditure. And debt service is one of the number one non-discretionary expenditure of the government, which means you have no choice than to meet it, even if you have to borrow to meet it. And if we understate that, then we are obviously overstating the other expenditures, because we must meet this debt service before we can meet those other expenditures. But beyond that, like I said, looking at the intention of the budget, they want to create economic growth, they want to create employment. They sound very altruistic, they sound very plausible. Whether they can be achieved with the figures we've seen, given the limitation, the government said that the total federal collected revenue is about 17.7 trillion naira. That is what is collectible before you talk of distributable. Distributable revenue is about 12 trillion naira. And then the federal government has budgeted its own revenue, based on independent sources, revenue from crude and taxes, of about 10 trillion naira. And look at what we have achieved in the first half of this year. We've not done 3 trillion naira in the first half of this year. So if you use that as a basis, at a period when we have an elevated oil price, then how are you going to achieve 10 trillion naira next year? Nobody is sure that oil price will trade about $80 as it's doing, almost $80 as it's doing today. Next year, you have projected oil revenue based on $57 per barrel. You have projected 1.88 million barrels daily crude production, including condensate of between 300 and 400,000 barrels. But even if you meet that, how are you going to meet the independent revenue from independent sources? Are you sure you can meet the tax revenue? And if these things fail and you end up with about 6 trillion naira revenue, which is, I think, around the range that the government will achieve next year, then you are left to borrow 10 trillion naira. Add 10 trillion naira to existing debt obligation of the country. You can imagine what the debt service will be. So those are, for me, the great concerns. And we have talked about the issue of petroleum subsidy and saying it's consuming a lot of resources. We are spending more than 3 trillion naira on petroleum subsidy. If you take out that alone, then the possibility that the government will begin to balance its budget is quite high. Second quarter of this year, we spent 1.1 trillion naira on importation of petroleum products. That was about 15.98% of our total expenditure, of our total import bill in the second quarter of this year. If you take out the petroleum subsidy, we're likely going to moderate the consumption of fuel we have. The fuel that is currently being smuggled out of the country will be eliminated. And then possibly the 3 trillion naira or so that we spend on subsidy that none of us can touch, none of us can feel, can actually go into critical sector of the economy, help the government balance its budget, and possibly cut down the amount we're borrowing.
All right, Johnson, I mean, thanks for that analysis, but I would actually like you to further expand on the performance. How much do we know of the performance of the current budget that is just in its last quarter? You know, of course, that the budget size for this year is 13.58 trillion naira, out of which recurrent, expenditure, took a huge chunk, 5.64 trillion. Capital expenditure was below that at 4.125 trillion, with debt servicing at 3.32. So we've now moved to 16.39 trillion from 13, 3 trillion more than the current budget. Yet, Ben Akabueze, the DG of debt servicing of the debt the
Debt Management Office.
Debt Management Office says is still low, and that we're not doing sufficient as we ought to. Where are we supposed to be? And just like you said, will we only get there when we're now borrowing like 10 trillion to fund a budget that will look ideal and can get things done for us?
Okay, let me start by putting it this way. There's what to call desirable situation, and you have called realistic situation. When Pastor Ben Akabueze said that we're not even budgeting as much expenditure as we should, that is desirable. But the reality on the ground is that we do not have the revenue to support that level of expenditure. If we continue the way we're going, I wouldn't know when it will happen, but I'm sure we're going to run into major economic crisis. The simple thing, we're going to get to a point where our total revenue will not be able to pay for debt service. If you are spending, today your income is 100 naira, you are spending 90 naira of that to pay debt, to pay interest, not to repay the loan, you certainly have gotten to a situation where you are going to default the day your income declines marginally. If you get to a point where your total revenue is not enough to pay interest on your existing debts, then you can imagine the situation you will be. I'm talking of assuming as a household, you and your family, that's the situation where you found yourself. The reason why the government is still surviving today, because the government has capacity to continue to borrow. But that borrowing, you're going to shut down that window at some point when you fail to meet interest payment obligations or loan repayment obligations. So we must bear that in mind. It may not happen now, but it will certainly happen in the future if we continue the way we're going. There are alternative methods to rebuild or to create in an economy where you have this kind of situation. And I think the government should explore that. Government has mounted repeatedly of intention to bring in private sector to do some of this critical infrastructure the government is claiming to borrow for. The government has their infrastructure tax credit or road infrastructure tax credit, where those who invest on roads are allowed to recover the amount they invested from tax credit or from their tax obligations and liabilities. I think we need to expand that beyond just infrastructure tax credit. We need to, and the government has said this a couple of times, get to a point where we bring in private sector to build the infrastructure that build, operate, and transfer, such that we will attract foreign capital into the country. We will build the infrastructure we need to catalyze economic growth. The challenge we have is that our infrastructure deficit has made it difficult for us to be a productive economy. And if you don't address that, you end up in the same cycle, keep moving around and around and not making any progress, which is what the lot of the country for quite a couple of years. So we need to break that. And to break that, we need the foreign capital. And to do that, we need to create structures, commercial framework, legal framework, institutional framework that will allow private sector to invest in infrastructure in the country, recover the investment over time, and possibly transfer the asset to the government. If we don't do that, and we think we are going to depend on budgetary allocation to build infrastructure so that the economy will begin to grow at a desirable level, which is what Mr. Ben Akabueze said, that we are not even spending enough. But you can't spend enough if you don't have the revenue. And you cannot have the revenue if all your borrowing is going into recurrent expenditure. Because you are not catalyzing economic growth, you're not catalyzing economic development, you're not creating the structure that you need to support productive activities that will lead to an increase in revenue or earnings, and as well as employment that government can tax.
All right, Mr. Johnson CHUKWU, please do stay with us. We'll go on a short break now, and when we return, we'll continue with the issues regarding the budget. Please stay with us. You're welcome back to the morning show here on Arise News. We're still on with Mr. Johnson CHUKWU, who's the director of COWRY Asset Management, sharing perspectives with us on the 2022 proposed appropriation. You're welcome back, Mr. Johnson CHUKWU.
Thank you once again for having me.
All right. If we do not borrow and subsidies are removed, how do you think that Nigerians will cope, assuming that we are looking for what you said to be alternative ways of properly managing the economy?
Okay, let me mention one thing that before I address that. If you look at the total government expenditure, the current expenditure is about 6 trillion naira. And you know, in my projection, I had expected that total revenue will be about 6 trillion naira. So about 6 trillion naira will be spent on paying wages and salaries of the government employees and on government overhead. So that does not impact on a lot of Nigerians, apart from the trickle-down effect of where government employees go to the market and buy goods, and then the woman in the market will sell some goods to them. But so if you look at that budget as it stands today, and we failed to borrow, because the projection is that we're going to borrow 6 trillion naira. My projection, we're going to end up with about 10 trillion naira if we have to fully execute the budget that's currently presented. And then you save about 3 trillion naira from fuel subsidy. You already have a situation where you have 3 trillion naira to either invest to meet your capital expenditure budget, or to invest in other social infrastructure, social education, which is critical if we have to build the human capital that will lead to Nigeria being a competitive economy, or invest on healthcare facilities, invest more on security, smart security or smart investing when you get value for money. Because if you just enough to throw money at it, I will emphasize this earlier. So 3 trillion naira will come from that. Then look at the amount you have provision for capital expenditure. And we say, look, let's even look at the most critical infrastructure that you need for an economy to begin to work, which is transport infrastructure. You need to look at your seaports, your airports, your road transport infrastructure, and rail transport infrastructure. Those 4 elements. Let's start from the logistics, which is a major bottleneck, the seaports. Today, you bring goods to the Apapa wharf, it stays 2 months before you get them cleared. Apapa has a lot of abandoned containers because by the time you bring them out, the value you get from selling those goods is more than what you pay, assumably to the shipping company. So we've already identified some these seaport areas, Bonnet, Lekki, and some other areas where we can, and then you bring in private sector to concession those deep sea port locations and allow them build the logistic infrastructure, that is the seaports, that will allow us bring in goods efficiently and take out goods out of the country efficiently. The government will not put a dime, but the seaport will be in Nigeria. Nigerian government will collect taxes from the companies operating from that area, and it will be more efficient to bring in goods and run businesses in the country. Let's look at the railways. The government has been trying to build Lagos-Ibadan standard gauge rail. The one from Port Harcourt to Maiduguri is going to be the narrow gauge rail, which is no longer obtainable anywhere in the world. And then we have the coastal rail. It's still on paper. If you look at the coastal rail, which for me should be economically viable, and you concession it to private sector operators, because you're going to cut across Benin, Onitsha, Aba, Port Harcourt. Those are very viable routes, transport routes. If you concession to the private sector, maybe in the next 5 years, a lot of capital will come in. If it's going to be $5 billion, $10 billion that we invest in that, it will come into the country, a large part of it will come into the country. We'll have that infrastructure. Money will be spent, employment will be created while this is being built. And businesses can strive and manufacture and take their goods to the seaports and take them out. Farm produce can go to the rail stations and get to Lagos, and then they are shipped out of the country. Go to Calabar, and they are shipped out of the country. You can ship fresh fruit from the country, and that will encourage the agricultural sector to grow. But if you think you're going to build that rail infrastructure, build the seaports, build modern airports with this mega allocation to the budget from the budget, we are not going to achieve that. And before I go, let me mention this: the government of the country has been trying to build a second Niger bridge. That bridge was originally concessioned to private sector operators to build, operate, and transfer. The government revoked that and brought it back to the budget, and then it's building it for budget allocation. For the past 6 years, that construction has been going on. If it had remained in the private sector hands, it would have been built in less than 2 years. And then by now, we are talking of what time do they still have to lapse before it reverts to the government. But we're not achieved that, and we've not been able to build that. So that's just a live example of the effort of the government trying to build infrastructure for budgetary allocation when you don't have the resources. Let's bring in private capital. The private capital is big. I'm in London. I'll be speaking at an event of investors, those who want to invest in Africa. And I've gotten so many invitations for private meetings. People want to invest in Africa because we're the last frontier. But unfortunately, we're not creating the windows that will allow those capital to come into our country. And they are going to other countries because the world is not going to wait for us.
Understood. The world is not going to wait for us.
At all. At all.
Well, Johnson CHUKWU, who is the director of COWRY Asset Management, thank you very much for joining us on the morning show this morning. I hope you have a great rest of your weekend.